I thought bears were Russian, but China's stock market is also going all bearish. But Africa's infrastructure products, if the Chinese stop spending money, what happens to infrastructure projects on the continent? This is Tonight. I'm Bruce Whitfield. Tonight I'm joined by Sven Richter, who's Managing Director and Head of Frontier Markets at RenAsset Management, to find out. What's happening in China is maybe symptomatic of what's happening in an economy, but a bear market is not the same as a bear investment market. Are we not overreacting to what's going on in China right now?
Well, I think we probably are, but there obviously are dangers, because if we look at the broader world and we look at China in the context of everything else, we have the US, which looks like the economy is doing well, but they do want to take some of their sort of foot off the accelerator and, sort of stop giving such easy money out. We have Greece, which is not the biggest economy in the world, but it can overflow into other parts of Europe. And then we have China, which the Chinese economy is still okay. It's not where it was sort of 3, 4, 5 years ago. It's 7% growth. It's now at 4% growth.
It's a bigger economy, growing more slowly.
It is the second largest economy in the world now, and in those days it's probably the 5th or 6th largest economy. So yes, the net quantum is there. And then if you look at the obviously the Shanghai index, you're going, well, what the hell has happened there? Okay.
But you've got to look at the Shanghai index 12 months ago, 6 months ago, and now.
Well, I think you must also look at it in 2007. In 2007, you saw emerging markets that had 3 to 5 years of movement upwards, and Shanghai hadn't gone anywhere. And then all of a sudden, in 1 year, it peaked, and within 6 months, it of course are going crashing down as well. And now you're right, we've just suddenly seen a peak for no reason, and we're starting to see it come down. And the Chinese are doing some very strange things to hold it there, which I think is just not going to work as such. But the question is, will it overflow into the Chinese economy? And if that does, will it flow into Africa? I think is what's important.
So, based on what happened in 2007, yes, when we had a severe dip in markets, and there would have been a Chinese-style response to that,
yes,
what was the real-world consequence of that pullback? And can we learn from that as to what might happen now?
Well, that's it. The real-world consequence was actually quite severe. I mean, that was a financial crisis. But the one thing is that while China was having that, the rest of the world was having that as well. And if we look across the rest of the world, especially if we look at the emerging market world, I'm not seeing things are so overvalued at this particular point in time. So I don't think that we're in exactly the same position we were there. However, if it does, then there's an implication. I mean, if you look at Africa and you look at foreign direct investment in 2008, 2009, it came down, okay. Yes, it didn't go to zero. And in fact, you actually found these economies held up quite nicely, because a lot of the economies in Africa are driven by this infrastructure spend, which is a longer term spend. It's not a day-to-day spend as such.
But many of the rapid growers, circa 2007, 2008, would have been benefiting from fairly new growth in oil revenues, for example. Between 2008 and 2014, they became fat and lazy on gorgeous inflows of foreign money, courtesy of oil, and suddenly oil revenues have halved, and many of those economies simply don't have the mechanisms to cope with that. That's a double whammy.
Yes,
domestic and foreign.
Look, half of African countries are net negative for the oil because they're the exporters, and half of them, such as Kenya, are net beneficiaries because they import oil. So actually, they're quite happy to see the oil price where it is at the particular point in time. Yes. Now, the thing is that what will happen in terms of growth? African countries tend to be growing a little bit slower than they were in those days, but on a slightly bigger base, not as big as Chinese was able to build in and slow down, but it's there. The infrastructure is still coming in, and I don't think that the rest of the world's appetite for both markets that they can sell things to and places that they can take raw materials from is going to slow down, because more people are being born every day. What we need to do in Africa, and what we are doing, but at a slower rate than we should be, is starting to manufacture more. We need to manufacture some of these raw materials into end products instead of exporting them in the raw material form.
Absolutely right, and we import at huge premiums. So how does the scenario play out? Because here we've got a situation in China where we don't know whether or not the negative market down 30-odd% in the last month, how that's going to play out in the real economy.
It is difficult to sort of give a final synopsis of it, but I don't think it's going to be a big issue because, as you said, the Chinese market has shot up very recently. So it isn't a symptom of a long-term overbuilding. It's a symptom of suddenly taxi drivers starting to get sort of margin accounts. 4.5 million margin accounts have been opened up in the last 6 months or so. Okay, so everyone's saying, well, the way to make money is to buy with what we don't have on a margin account. Now, there's going to be some implications. Some brokerage firms will probably go bankrupt because there's going to be some people have made money from this. Of course, they're just going to keep very quiet about this whole thing and just quietly go to the bank and cash their checks as such. Now, will there be a bigger effect? I have heard that some companies in China have borrowed against their shares, okay, which of course is really scary. But it looks like probably only less than 1% of total corporate debt is on that basis. So it's not something that should disrupt the whole economy.
So it should be systemic,
yes.
No?
So my thing that I want to watch for very carefully is if this pushes over into Chinese banks in any way. Because if it pushes over into Chinese banks, then my concern is that pushes over to Chinese corporates. And where does most of the investment in Africa come from? It's from the Chinese corporate and from the Chinese government. It's not individuals. You know, these people on the stock market in China are not going to come through and invest in Africa.
It's a state-driven process, as we've learned with ICBC coming, buying a passive stake in Standard Bank, and still waiting for some kind of benefit out of it.
Yes.
But they're prone to the test match series, not even the 5-day game. Exactly. Chinese investors.
It can be also a political issue as well, because China wants to be sort of stand up toe-to-toe with America and wants to be seen as a world superpower. So partly the investments also have a political implication here. I mean, why is there a BRICS bank? Okay, because it's desperately needed to have another bank. It can be useful, but it's about these countries saying that they are really important now and wanting to invest where they want to invest to push their political agenda.
Now, here we've got a situation where just recently there's been the BRICS gathering in Russia, and there's Jacob Zuma shaking hands with Vladimir Putin, and whether or not it really transpires into a R1 trillion nuclear contract or not is yet to be seen.
Yes.
But we look in South Africa and we look at the massive sort of infrastructure we need. Yes, we need electricity. Do we need to spend R1 trillion on just nuclear energy, or can we spread the love a little bit over the next 10 years? We have a real infrastructure problem in South Africa, and we seem to be addressing it piecemeal.
Yes, I would agree with you that I think the government is in sort of fighting, back mode now at the moment, and they tackle little things at a time. And I'm quite surprised at it, because if we go back 3 or 4 years ago, they were putting out a strategy, and it was going to be a cohesive strategy. It was going to be how we were going to grow the country. And it seems that everyone's chipped away at this strategy, and now we're just trying to fight a fire here and fight a fire there. And if we're not careful, Nigeria's GDP is bigger than South Africa. Now, the economy is not the same rounded economy that we have in South Africa too, in terms of that. But they're growing it. Okay, so if we're not careful, we're going to be really left as the sleepy part of Africa if we don't focus, have a strategy, and move with that strategy.
Somebody in government's read an economics 1 textbook which says infrastructure spend leads to growth, and then hasn't quite thought through economics 2's textbook yet, and has kind of gone, well, infrastructure spend, electricity is infrastructure, nuclear, R1 trillion, that'll drive some growth, because people are blaming us for not having enough electricity, and that's hampering growth. So the sooner we get electricity, the sooner we will grow. Yeah, it's part of the puzzle.
But it's part of a bigger puzzle as well. Look, of course, as we know, not having electricity leads to slower growth. I mean, what's our GDP growth rate at the moment? And partly that's due to the fact that factories are not producing what they should produce at this point in time. And if I was an international businessman saying, do I put my factory in South Africa right now, I'd be going, not so sure, because my competitive edge has been eroded. I have to provide my own electricity, possibly.
No, but that's the real issue. So, slowdown in China, not a disaster. Are there potential consequences, though, for different infrastructure projects that are dotted around this continent?
I think they are, and I think that you'd have to say the most at risk would be any driven by corporates, because if there is an overflow from the market into the corporates, they'll be the first ones that slow down, whereas government ones will be insulated more because it's about the government putting their money in and doing things.
In South Africa particularly, every budget speech since the days of Trevor Manuel, we've spoken about 800 billion rand, which is going to go into construction projects, and next year the same number is mentioned, and then the year after that it might change by 10 or 20 billion. But you look at the construction companies, South African construction companies, not squeakiest of clean companies in the world after the 2010 World Cup and the criticism of their pricing behaviour there.
I'm suspicious of construction companies throughout the world, actually.
Okay, all right, so let's not be unkind just to all construction companies, from bucky builders all the way to the top. Sure, but there's so little trust here that we just don't seem to get any infrastructure projects off the ground at all. Is that unkind? I mean, we've got a very nice Gautrain project. We've got a very nice highway between Pretoria and Joburg, which nobody's wanted to pay for. So we're stuck in a really difficult no man's land in terms of infrastructure.
I mean, well, look, obviously we do get some off the ground. I mean, as you mentioned, 2 examples of that. And I think that sometimes, we living in Johannesburg also can be unkind, because we used to a fairly good infrastructure, and then whenever we see something wrong, we get upset about it. Go drive northern area of KwaZulu-Natal, as I did recently, and all the back roads there. And most of them are actually in pretty good stage. Okay, so KwaZulu-Natal is doing a good job of putting roads in place. Other provinces are doing an absolutely terrible job, and there's no road left. So
have you been to the Free State recently? And if you go from Joburg into the southern Drakensberg.
That's exactly the one where I wish that all the tar would disappear so you could drive faster. In fact, there's bits of tar. Okay, so yes, there's some that are really bad, while others are good. So the ability is there to do it. We just have to deliver properly throughout the rest of the country. But yes, there's also this whole fear factor of each other. You know, the moment that we have a really important thing, like let's build some power stations, then you have certain interests saying, well, hey, so now this is important for the country, so now I can actually push for more wages or more things, instead of going, this is a national emergency, we need to actually build these things as soon as we can, or at least on time.
We would say multiple vested interests and no sort of sense of unity around the problems that we face. Do you see a future around that, sort of some sort of social cohesion, perhaps?
Well, I'm an optimist, so I do think so, okay? But at the moment, sort of, you see more and more fractures everywhere. And I think that we don't have leadership in this country, actually, sad to say. I think that we need a strong leader who can stand up and move us forward. And we've had that in the past, and we don't have that at the moment. And that I see as a weakness in us. A strong leader doesn't always make the right decisions, because sometimes wrong decisions are wrong. But they at least take you forward, and most decisions are right, and at least you're going somewhere and doing something. At the moment, we're sort of marking time.
Well, if you're making decisions, you can change your mind. If you're not doing anything, there's nothing to change.
Yes.
There we go. Sven Richter, who's Managing Director, the Head of Frontier Markets at RenAsset Management. Thank you for coming, and thank you for watching. There'll be more tonight, tomorrow. Till then, good night and goodbye.